Hey, what's going on? My name is Lewis with Cryptolete, helping you to discover cryptocurrencies and to learn how to make money with them. In today's video, we're going to be going over one of the, if not the most important thing that you can know about markets. We're going to learn how to trade market cycles. Now, learning how to trade market cycles is probably the most important thing that you can learn if you are trying to be an investor or a trader. The reason for this is because market cycles repeat themselves, and if you can learn how to trade market cycles, that can set you up for incredible gains. So let's get to this presentation and I'll see you at the end. First things first though, I'm just gonna read this off. Here is the disclaimer. You got to read this very carefully. First things first, this content is not investment advice. It's not legal advice. It's not personal advice. It's not financial advice. Everything that is in this presentation, everything herein and forthcoming, okay, it's personal opinion. It's my opinion. Nothing here is professional advice. Me, Louis Raskin, I'm not a professional. I'm not a financial advisor, a trading advisor, or an investment advisor. And you should always consult with a professional when dealing with your finances. And you need to know that trading and investing in cryptocurrency is incredibly risky. It's a very volatile market. Profits are not guaranteed, and you could lose all of your money. Now, hopefully, with the right knowledge, you can minimize your losses and have big gains, but that's not guaranteed. And past performance is not indicative of future results. And because of all of this, the number one rule when it comes to trading and when it comes to investing in cryptocurrency is to never trade or invest money that you are not willing to lose. So with that out of the way, let's get on to this presentation. Make sure to give it a like, thumbs up if this is valuable to you. And if you want to learn more about any of this stuff, just put your questions in the comments box. I'll be sure to make a video on that. So I'm gonna take myself off the screen and get to the presentation. Okay, so like I just mentioned, this is the Trading Crypto for Noobs presentation. There's two parts. Part one covers why you should get into crypto to begin with. How do you even get started with it? What can you do with it? And where do you store it? All right, so why even trade crypto to begin with? Well, the most obvious reason is that you can make life-changing amounts of money trading crypto. Crypto has grown thousands of percents in the past few years. $100 of Bitcoin 7 years ago is worth $75 million now. $100 7 years ago, 75 million. That is pretty crazy. And the cool thing is about trading crypto is that you don't need a large amount of money to start. You could buy a fraction of a Bitcoin. You can invest $10 if you want. So that's why you should trade it. And with that, let's go over what we'll actually cover in this course. So we're gonna go over how to trade and invest, the 5 crypto market cycles. We'll go over the best time to invest into crypto and when to stay away, how to manage your trades to potentially avoid big losses, and how to understand and profit from mass market psychology. So just do a little prereq to begin with. What is Bitcoin? Well, Bitcoin is the first successful, completely digital, decentralized currency. If you're wondering what that means, it basically means that it is on the internet, it's a currency, it's a store of value, and you could sell it to people just like physical things, except it's on the internet and it's not physical. It's equivalent to digital cash or gold. The reason why it's awesome is because unlike cash and gold, you could move crypto to anywhere you want across the world very fast, within a matter of minutes, very cheap for only a few dollars, and incredibly secure because the security is built into the network that blockchain runs on. And you can do all of this without the need for a bank. It's peer-to-peer. That's because it is person to person. You own your Bitcoin, the other person owns the Bitcoin, and that's the way it is. So why should you get into crypto anyway? Well, it's the future. In under a year, over $5 billion have been raised into cryptocurrency startups. The market cap is still under $1 trillion. And now that might seem like a lot, but it's actually extremely small, especially for a global market. And that means, in my opinion, this is now the best time to get in. And the reason is because eventually so much money will come into crypto that the market cap will be in the trillions. And when the market cap gets in the trillions, all of the good coins, all of the things that are actually legit within crypto will be worth a lot more. So if you get in now and it all works out, even if you don't even touch it for years, you just hodl long-term storage, you will still make huge gains, in my opinion. However, you can make way more trading, which is why it's a good idea to get into trading. So you can make money whether the market is in an upswing or a downtrend if you know what you're doing, and that's why knowledge is power. Knowledge. And the other reason why you should get into crypto is because eventually the blockchain it's going to be in every single sector. It's going to be in the banking sector, the government, the medical field. Every single sector on earth is going to utilize the blockchain technology because it's simply that good. Okay, let's say that I've convinced you want to get into crypto. Well, how do you even get started? Well, the first thing that you got to do is you got to buy some crypto with some fiat currency, some USD, some dollar bills. And you do that through exchanges like Coinbase, Gemini, Robinhood is one that's coming out, and there are a few others. You can buy Bitcoin, Ethereum, Litecoin, and other cryptocurrencies with your own fiat currency through these exchanges. Some other ways that you could get started are mining them. You can mine them, which is basically when you buy computers and you get paid for helping the network run. You could earn them if you have a job that pays you in crypto. And of course, you could invest and trade crypto. You could buy and sell your crypto with the goal of making profits off of the highs and lows in the market, which is exactly what we're going to talk about in this presentation. So how do you actually invest and trade crypto? Well, there's about 6 different ways you could do that. The first one, and the one that we're going to be covering, is spot markets. So spot markets is basically trading. That's where you buy and sell crypto in hopes of making a profit. You use fundamentals and technical analysis to trade. You use a combination of both of those things. You could also get in on ICOs, or initial coin offerings. And if you have enough money, you could be an early stage venture capital investor, which is before the ICO. That's like pre-ICO stage, startup, super startup. There's also futures, future contracts, stocks, and ETFs. And you could also, if you're intelligent, create a blockchain company and get investors. But obviously we're going to be talking about the spot markets because that is, and just trading, because that is what this is about. So how do you trade the spot market crypto markets? Basically traditional trading. Well, the first thing is you sign up with an exchange, Coinbase, Gemini, Robinhood, etc. You buy your crypto, usually Bitcoin, Ethereum, or Litecoin, and then you choose your trading style. Do you want to day trade? Not recommended for beginners, and not even really recommended for intermediates, because most people lose day trading unless you know exactly what you're doing. Do you want to swing trade? This is what I like doing. Or do you want to invest long term? Obviously, I love investing long term. Everyone should have a combination between all of these things, or maybe just investing long term and swing trading if that's what you want to do, or maybe you just want to invest long term. It doesn't really matter. It's up to you. Anyway, after that, you want to prepare for the best time to make your trades. So you want to invest a little bit, and then you want to learn about market cycles, and you want to understand when the best time to buy is. And that's what this video is going to be covering. So you want to take the trade when the opportunity comes up, and you want to manage your risks. So that means you want to prepare for the best time to make your trades. You want to know what you're doing, have your plan laid out, and then you want to take the trade. You want to pull the trigger when the opportunity strikes, when it comes up. And you want to also manage your risks within the trade itself. So let's just touch on where you actually store or allocate your crypto. There's a few different ways. Cold storage, that's what you don't touch. It's like gold. It's super long term. You store it on a wallet offline. It stays in a safety deposit box or a vault or some incredibly safe location. You could do position trades, and that's where you hold it for 1 to 3 years. And those are things that you take profits when the market goes on a huge bull run, like what it did in 2017, in December 2017. And I said you get 100% gains, but usually it's I think last time it was like 2,000% gains. So it could be insane gains doing these long-term position trades. And then you could do short-term trades, which is swing trading, day trades. So you could buy something and then, say a month or 2 later, you see that it goes up and it doubles, or it goes up 50% or something like that. Then you could sell out and then it'll go back down. You could buy it down here and then you could go back up again, a month, a week, whatever, or a day if you're doing it in the day trading. And then also you can invest or allocate your crypto into ICOs or traditional venture capital if you have the funds to do that. And also with ICOs, you have to be, you can't be American. You can't be an American resident to invest in most ICOs because of SEC regulations. So we're not going to be talking about any of that. We're going to be talking about short-term trades. And let's get into it. That's part 2. So in order to, successfully do short-term trading, you need to understand what markets do. All right, here's the thing. Everything is a bubble. Do not let your emotions get the best of you. Everyone is you're going to hear, oh, it's a bubble. It's the tulip mania all over again. Blah, blah, blah. Don't invest. It's BS. You know, I heard all of that, didn't care, invested anyway. Then I looked at the technology and I was like, oh my God, there's no way this is a bubble. This is like crazy. And by no way this is a bubble, what I meant was that a bubble does not mean total death, okay? Bubbles expand and they contract, but they don't go away forever. And to really show this, all you have to do is think of the internet back in 2000. Back in 2000, there was the quote unquote internet bubble where, guess what? It skyrocketed super high and then it crashed. Well, the year is 2018 right now. Is the internet still available? I think so. You're using it right now. The internet did not die. The internet was a huge bubble. What about the stock market in 1987? What about what was it? Black Monday, Black Friday? I don't remember. But the point is, stock market's still here. How about the housing market in 2008? Everybody could remember that. You know that if you bought the houses in 2008 at the peak of 2008, if you bought them, you would be good right now. You would be good, even though everything crashed, if you just held on to them. And the reason is because all of these things were bubbles. And all of these things are now worth hundreds to thousands times more today after the corrections. So the point is that as long as there's underlying value, the markets will continue to rise over time unless some insane thing happens, like the government of United States and the UK and all of that. They say, oh no, we're going to ban Bitcoin forever and make it illegal. But considering that the SEC and the CFTC just had a meeting on Bitcoin and they said that basically they were very bullish on it. They said that the blockchain technology and cryptocurrencies are basically here to stay and that they'll be in every single sector and the government will be using them and there's task forces. That means that the government is not going to shut them down. And the other thing to note is that Bitcoin has went through a lot of bubbles. It's been through so many bubbles, and every time it does, it grows even greater when it recovers. And let's just look at some examples of that. Going back to 2013, all the way to 2015, look at here, boom, super spike up. Everyone's like, oh man, what's this Bitcoin thing? It's going pretty crazy. I need to buy some. And then over here, people are like, well, I don't want to FOMO, I don't want to miss out on this. So they buy some over here and they buy some over here. And then they get to the top and all of the people who bought it way down here are like, now's a good time to sell. So they sell it off, drops down. But then they're like, you know what? We're going to buy some more. So they buy it up and then it comes back down and it falls and falls and quote unquote crashes. The bubble has burst. Bitcoin is dead for the 10th time. And then we get into this long period of just accumulation where it's range bound between here and here. And this was like 2 years, but you know what eventually happened? 2016 came around and more people got into it. Here's that period that we were just talking about and it keeps on going. And then all of a sudden it gets more and more and more and more. And then we have another bubble. Boom, it bursts, brings it back down. Now it's August 2016 to January 2017, and then about 10 months later, 2017, had another huge spike, and then another correction. And this is what we saw back in December, in November. Everyone was talking about it, and then December, everyone had to get in, and it spiked up to 20K, and then it went back down, and now we are here, or we're a little at 10,000 right now. And I'm about to show you the point I'm about to make on this slide. Look right here. All of these little points, these are all quote unquote bubbles. Every single time it went in a bubble and then it popped, and it went in a bubble and it popped, when a bubble popped, when a bubble popped. That is when everyone's like, Bitcoin is dead, and the media says that it's useless, and you get all this FUD, all this fear, uncertainty, and doubt. And this right here, if you look, this right here, you bring it back, that's this right here. And this is the crazy thing. If you look at number 4, see this little blimp? This little blimp on the radar right here. What's the date on here? That's December to January. December 2016 to January 2017. Well, December 2016, January, that's what this is right here. And look at this graph. If you zoom in, you see that this is the graph right here. And what does that look like? It looks like this. It looks like the latest graph from 2017 to 2018. It's the same thing. Except this is right here. So in 5 years time, this right here, what just happened when it went up to 20K, when you zoom out, that's going to be this. And these are not even going to be, you're not even going to be able to see these because it's going to look so flat. And this is why knowing the big picture is important because it'll help you to know when to buy and when to sell. You see, if you looked back and you saw the history of what has happened with Bitcoin in the past, all of these spikes and then drops, all of these parabolic moves and then the drop off, you would see, or you would know that that is exactly what would have happened. And then you wouldn't have gotten burnt because you bought up here at 19,000 and then it went down and now you're sitting at a 50% loss and you're like, what is happening? So that's why looking at the history is so important, because if you did that, then you would know that this is exactly what you should have done. And that means that you should have sold, or you should have been buying down here, and then you should have been selling all the way up little positions, or maybe sold right here or right here, and then put little stop losses right here, on the way up as it continued to ride its wave up. Obviously, maybe you didn't even know about Bitcoin before December. Maybe you didn't even know about Bitcoin before January. I mean, look at this volume right here. It's insane. But this video is preparing you for next time, so that when the next move comes up, the next parabolic wave spikes up in the uptrend, and all the media is talking about it, all the frenzies are happening, and your mom and your grandparents and your uncle and the media is talking about it, that is the time to sell. It's not the time to buy more. That's when everyone's going to be buying more. So you got to put your stop losses in, at these times. And that's actually one of the simple rules of trading. So I got some simple rules of trading right here that you need to just put into your brain, which is to buy low and sell high. You buy it when it's low, when the prices are cheap and you get them on sale, and then you sell them when they're up here, when they're super high, and you take your profits. So many people run on emotion, and then they get fearful, and then they buy because they get FOMO, fear of missing out. So they buy when everything's going up, and then it crashes and it goes down, which it always does. And then they sell because they're fearful, and they're like, oh no, and then they call it a scam. Look at it and see, is this at an all-time high? Yes? Well, then I'm not going to buy. And Warren Buffett, you probably already know, be greedy when people are fearful, and be fearful when people are greedy. Great quote, because back here, everyone's being so greedy right here. Everyone's being super greedy, and they're buying up. And now you're like, oh man, you're seeing it all over the place. Now is the time to be fearful, and that's why you sell over here. And then the fourth thing is to accumulate your investments when the price is low. So when the sentiment is down, when people are like, oh no, I'm not really into Bitcoin, when it's boring, that's when the news is saying it's tanked. In a few months or a few years, the market will eventually turn around, and then you could really make your gains when you accumulate your investments when the price is low, all over here, and then right here, and then right here, and then right here. These are the times to buy, because eventually it's going to come up again. And then the fifth rule of trading is to only sell at a loss if you see another opportunity that will give you better returns. So the point is, you don't want to always have to think, hold on to dear life. If you know what you're doing, you can sell for a loss on one trade and quickly make that loss up on another if the opportunity is there. And then finally, understand market cycles and trends. That's what this video is all about. It's to help you understand this. Markets go up and they come down. So take advantage of this. And this is a perfect graph that illustrates market trends. So look at this chart for Bitcoin, okay? So Bitcoin has had a ton of breakouts ranging from over a year between the breakouts to under a month before the next one comes along. So after a huge breakout, it could be a few months, or it could be over a year or two. It could be, no one knows how long it's going to be until the next breakout comes along. However, the cycle of the market continues to go up throughout history. And you could see, back here in 2013, it went up and then it went down, and it stayed in this range 2014, late 2014, all of 2015. This is a long time. This is months and months and months. See right here, it's a long time before there's another blimp, a little breakout, and then there's a long time for another breakout, then a few more months until another breakout. And so let's just go over this real quickly. Like, this is basically the market cycle. Down here, this is when you need to be patiently accumulating your Bitcoin. This is smart money right here. The same thing right here. And so this is where, you accumulate your Bitcoin, and you can see back here, this is the spike. This is when the media starts reporting on the rising Bitcoin price. It increases the public interest and it lures a lot of speculators into the market. People thinking that they're going to get rich quick and get that Lambo and go to the moon. This is when the long-term holders start to actually accumulate their profit by selling off to the eager buyers that are coming into the market. And then it reaches its peak, and this is the price and sentiment reach the dramatic peak, and then it goes back down and it drops because eventually the buying frenzy can no longer be sustained. And that's when an avalanche of selling is triggered as speculators start panicking. And this happened back here. And then the cycle started over again. And then it came back up and it happened again. And you could see, boom, huge bull market right here. And then it peaked. And then all of the people who were buying it up here, and then it starts to dive down. They're like, holy shit, I'm losing all my money. This is a scam. I'm getting out. I don't know what I'm doing. And they sell out of fear. And they keep on selling, keep on selling. Meanwhile, all the people who are smart back down here, they're just selling on the high, and they're doing some trading where they'll sell it right here, and then they know that it's going to do a couple bounces, so then they'll buy more back here and they'll sell it up here, and they'll buy more back here and they'll sell up here until it reaches that stable bottom, that stabilizes out, and that's when they start to really accumulate a lot more. And so the point that I'm trying to make is that after a breakout, also called the parabolic move, which is when the price jumps up to incredible new highs, there's always a pullback. There's always a pullback, also known as a reversal, a retracement, or a correction. And many times, the price of this pullback will actually pull back all the way down to where the price was previously. So a lot of times what happens, there'll be a huge spike, and then it'll go down, and it'll go down even further than what you think. And that's when it's oversold. When things are oversold, that's when you definitely want to buy, because then it's definitely going to come up. Like up here, it's overbought. It's way overbought. But down here, it's oversold. And this happens when people panic and sell everything off, even when it gets low. And as you know, you should not be doing this. But this is human emotion we're talking about here. And human emotion is what determines the price. This happens because people are fearful when the price experiences a heavy loss. And many times people get scared about their savings when this happens because they broke the number one rule, which is don't invest more than you're willing to lose. So they need the money for rent or for bills, and they're forced to sell at a loss. And then the price falls, and then they get fearful and they sell. So remember Warren's quote, be fearful when people are greedy, and be greedy when people are fearful. So wait until everyone is all fearful and selling off, and then wait until it stabilizes down around the bottom, and that's when you buy more to build up your investments. There's one thing I want to say though, when the market turns bearish or starts to come down from a parabolic run-up, the price will fall, and then it will rise again, and then it'll fall some more. So when everything is going down, you want to wait until you get confirmation that the bottom has actually hit, because otherwise it'll probably continue to go down. Or you could buy at a price you feel comfortable buying at. Say that you feel comfortable buying at an 80% retracement, then just buy there, buy at the 80%, and then just be cool with that because it's a long-term play. Now, if you're doing quick trades, you can learn how to do that and actually still make a profit even on the bounces when it's going down. This is called shorting, and it's a more advanced concept. If you're buying to hold though, you want to just wait until it gets close to the bottom levels, and then you start dollar cost averaging your way in until it just hits these lows, and then that's when you can make your bigger purchases. And then when the next bull run comes along, boom, you'll have a ton that you bought low, and you can sell when it reaches the new all-time high. So after the correction, what happens? Well, after the crash or the fear-based phase of the market comes the phase where the price becomes range bound, which means there are pretty clear support levels and resistance levels. This isn't like too exciting for most traders, but you can still make a lot of money trading during this phase. And like I said before, this could take a few weeks, it could take a few months, it could take a few years. This is when you invest for the long term and do like longer term swing trading. This is my opinion. You could do, there's always trading. You could do day trading in this phase, not a problem. Although trading during this phase is a little easier, way easier and a lot less risky. Either way, you just wait for the big swings and you sell the highs and you buy the lows. Eventually, there's going to be another parabolic run, and that's when you want to take your big profits. So once the market turns and starts to go down again, that's when you start to short the market. And then after the market goes through the crash, pullback, the correction, whatever you want to call it, that's the point where this comes back, and you could see it's just a cycle. And at this point, I'm literally just repeating myself over and over and over again. So this was your 101. What do the markets do, and how should you think about trading cryptocurrencies, and when's the best time to buy and when's the best time to sell? Now, guys, there's actually one more thing that I want to mention, which might actually blow your mind if you haven't noticed already. This chart that's on the screen right now of the Bitcoin hype cycle, this is from 2013 to 2016. This is not the 2017, 2018 hype cycle that we experienced, but this actually happened previously, and it happened before this as well. So this is why I use the Bitcoin hype cycle to determine when I'm going to put a lot of my money into my investment fund. And this is why I recommend everyone to know about it. And it's why this is one of the first videos and one of the most important videos that I recommend watching. So that was my video on the market cycles. And I know it is very basic: buy low, sell high, but so many people do not do this. So many people let their emotions take over control, and they do not use logic, and they do not understand the market cycles when they are investing and when they are trading. So now that you understand the market cycles, you could use this to your advantage. So remember, don't let your emotions come to play when you're investing and trading, and don't be so fearful when everyone else is fearful. That's when you should be greedy, and that's when you should be accumulating. And when everyone is being euphoric, that is when you should be fearful, and that is when you should be selling. Also, I want to mention, you should never invest more than you're willing to lose, or money that you need right now to pay your bills or to pay other expenses, because you never know how long each phase of the market cycle will play out. Sometimes it takes a few months, sometimes it takes a few years. So you never really know. So you don't want to have this money that you absolutely need to be invested into these type of things. However, if you do have capital that is appointed to investments, now you know the best times to invest and to trade. And one more thing is that in the world of cryptocurrencies, there are a lot of coins that we like to call shit coins, which are basically money grabs. They're coins that random people make up just to get people hyped about it, but they don't have any real underlying value. And what you want to do is you want to invest into fundamentally sound projects, things with really good teams, things that are solving a problem, cryptocurrencies that will be around for the long run, because those are the cryptos that will be going through these market cycle over and over and over again. The other coins, which are very, very low coins, they are sort of like penny stocks, and not all of those things actually go through this market cycle. So if you do invest and you do trade, make sure to do it with fundamentally sound and valuable projects. And with saying that, if you do want to invest, if you do want to trade, and if you do want to dive deep into cryptocurrencies and hopefully make profits, then what you need to do is check out the Crypto Mastery course in the description below, and that will teach you everything you need to know to actually be able to trade these market cycles. And of course, it will teach you everything else, such as how to research coins, which coins have great fundamentals, when to get in and out of trades, great strategies for protecting your wealth, and a lot more. So if you're interested in taking cryptocurrency trading and investing to the next level, there will be the Crypto Mastery course available for you in the description below. Other than that, I want to say you're awesome. Thank you so much for watching. Let's get to the moon together, and I'll see you in the next video.